all in on Bitcoin or gold or silver? Which would you choose? If you had a choice right now, if you had that choice from this moment on, all in on gold, Bitcoin, or silver or platinum, which one would you choose? Today we're going to look at how do these 3 or 4 metals or compared to Bitcoin. And we're going to show you something that nobody rarely talks about, and I bet you're not aware of as well, because everyone is so hot under the collar for gold and the silver trade right now. And in fact, gold and Bitcoin are kind of a related trade, as we've been talking about all this time, because when gold pulls back is when Bitcoin takes off. I've shown you guys a number of charts already where basically gold goes up first, leads the way, Bitcoin waits, then gold crashes. Well, not crashes, but pulls back, then Bitcoin takes off. But here's the thing. Why are all of them doing so well? Like Bitcoin hasn't done so well this year, but it's still up like thousands of X in the last 10 years or so. So here's the thing. This is what nobody talks about, right? These are all gold, silver, platinum, Bitcoin are all what we call a US dollar debasement trade. Debasement meaning the currency of the United States dollar has been debased, has been abused, has been diluted, if you like, right? They're all hedges or claim to be hedges against this debasement. What is this important chart I'm showing you guys today? My analysis of Bitcoin, by the way, inside this big range. I'll do that in a little bit, but just first, let's have a look at this chart. So basically, we're all waiting on Fed to QE. When Fed does quantitative easing, right, doesn't matter if it's Bitcoin or gold or silver or platinum, they're all going to pump, right? And they said, Jerome Powell just said about a week ago that he's going to, 3 days ago, that he's going to end QT. End QT is the necessary step before QE. They're going to end quantitative tightening. But what is quantitative tightening? They've been lying to you. They've been lying to you. They've been bull crapping to you, right? Look at this. When you think they're doing quantitative tightening, supposedly they're selling U.S. government bonds. They're selling U.S. Treasury bonds, right? And they're basically, taking more money supply out of the market, which is why altcoins have found it so difficult to go up, which is why Russell 2000 have found it so difficult to break into a new all-time high and have a proper run, right? So they say they're doing the responsible thing by taking liquidity out of the market, by quantitative tightening, by selling U.S. Treasury bonds. But that is a lie. Look at this graph right here. Look at this graph right here, right? This is red line, and the blue red line is U.S. held 10-year Treasury yield, Treasury bonds by the Federal Reserve, and that is the key. The blue line is Federal Reserve held 1-year Treasury bills under 1 year. See, under 1 year, it's called a bill, right? Between like 18 months to 5 years duration of the bond, they're actually called notes, right? U.S. Treasury notes. When it's like 8 years plus 10 years plus, they call that a bond. 20 year, they call that a long-term bond, right? Long-term bond. So look at this. If they're doing quantitative tightening, if they're selling bonds, why have this line only gone up? It's only gone up, right? Since they announced here they're doing quantitative tightening, they're selling U.S. Treasury bonds. It has only gone up. They're buying U.S. Treasury bonds, or they're rolling over the existing U.S. Treasury bonds, and they're not selling any. That's kind of like buying, because they hold it for like say 10 years, and when the time is up, say they bought it back here in 2014, and then when it comes to 2024, when they're supposed to let it go, let it roll off the books, that's what they do with some of the others. Treasury bills, they don't. They basically just buy it again. They buy it again. They don't let it roll off the books, which is kind of like, which is pretty much exactly like buying, because you're supposed to get the money back. You're supposed to get the money back, right? And that Treasury bond is basically retired forever, where you don't hold it anymore. See, in one key sentence, what does this have to do with Bitcoin, gold, crypto, and silver? It's this. They're lying to you. They're only selling the blue line, which is under 1-year Treasury bills. They're still buying or accumulating. They're not selling at all. Not only they're not selling, the line goes flat, kind of flat here. They're not only not selling, it goes up. They're actually rebuying back these 10-year plus Treasury bonds. Why is that? What does that mean? What's the difference, Pablo? The difference is these blue ones, they're basically borrowings or IOUs to the US government for less than 1 year. You're like, all right, the US government looks shaky to me. It's not going to collapse within 12 months. And besides, they own the printer, so that money's always going to come. They can always just turn on the printer. If they owe me like $1 million in US Treasury bills, they can always turn on the printer and return it to me. But if 10-year plus, like a 15-year, 20-year, even 30-year Treasury bond, this red line, they can't sell any of it. If they sell, then the market collapses, and US 10-year, 20-year, 30-year Treasury bond yields will spike up, right? And that has amazing consequences for Bitcoin, gold, and silver. But before we get onto that comparison, first, let's ask the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses exchange that's non-KYC. That means you don't need to show any of your ID. That means the IRS can't see you, the tax office can't see you, FBI, CIA, nobody can see you, right? Total privacy. That's why I made this deal with them. Exclusive prize pool went up to 20,000 US dollars just on the Pablo link, only on the Pablo link, and 20% bonus just by depositing. Deposit $100, get $20 bonus. Deposit $1,000, get $200 US dollars futures bonus. But it finishes today on the October 16th. So get on this, folks. Get on this, deposit, and get 20%. And if you're watching this on YouTube right now, then the link is in the description below. Limited time only, link is in the description below. But if you're watching on any other platform, that's okay, such as this one, then just click on my profile page and there's my link tree or Stan link. We click on that and it's the first deal that comes up, right, with Bitunix. And because this is a great deal. Okay, let's get back to the markets, folks. But remember, this deal is only available on the Pablo He-Man link, only on the Pablo link. So basically, now let's have a look at the chart itself. So they are right now so scared of selling those longer terms, right? So don't you find that amazing that all they have been doing when they say, oh, we're doing quantitative tightening, we are selling US Treasury bonds to take more liquidity out of the market. Remember how we issued so much money into the market? Now we're taking it out. But what's happening here is they're actually not selling the Treasury bonds, they're selling the Treasury bills. It's the bills market they can sell because like everyone trusts the United States government for another 12 months. See, bills market means this could be like 3 months, 6 months, 12 months. You're lending the US government money for another 6 months, 12 months, 3 months, 90 days, 15 days, whatever. But to lend the US government another 10 years plus 20 years, 30 years, those Treasury bonds, you need to essentially buy buy these Treasury bonds, and there's not much buyers, so the Fed can't sell them. If they sell them, then the bond market crashes. If like the U.S. Treasury bond market is much larger than the stock market, and the U.S. stock market is much larger than the Bitcoin market. So imagine that, like if they have to, if the U.S. government, if nobody's buying those bonds, then what do you think, how much trust do you think there is between like countries like China, Japan, European Union for the US government, right? Because there's so little trust now for the US government, for the US dollar, therefore things like Bitcoin, gold, silver have taken off. Bitcoin's doing what I said it's going to do, which is basically bounce between this range, right? This range is basically 123K to something like, it could go as low as 100K, because that's where Binance decided to drop it to. On better exchanges like Bitunix, prices stop at 104.5K. So I used that as a guide. I said, okay, I think we're going to swim between 123K to probably like 105K ish area, and we're going to swing for a long time. I talked about this in all my videos for the last 2 or 3 days. So basically, this is the scenario of of basically this is like another massive exchange caused liquidity flush out, and we're going to swing sideways here. That's what I said. If you want to know exactly what happens, watch my last couple of videos. But have a look at this. This is what's happening with gold and silver right now. Oh my God. Look at this. It's gone parabolic and parabolic and parabolic. 2% move today in gold. 1.6% move in silver, almost $54. And platinum, 3% move. Palladium, 1.7% move. So, like, I've drawn this chart quite often. And my point is that when basically Bitcoin catches, when we graph Bitcoin next to gold, we see that basically it lags gold a lot of the time. It lags gold, and basically you need to we need to wait for a gold pullback for Bitcoin to take off again. So have a look at this, folks. Like let me just adjust the chart a little. Okay, so gold and Bitcoin sort of have this correlated relationship, because they both call themselves, a hedge against US dollar debasement, or currency fiat debasement. And Bitcoin goes ahead and even calls itself digital gold, right? So here we go. So basically, look at this. I mean, here we have basically, this is the price of gold. Orange is, of course, the price of Bitcoin. Gold bottoms first and starts to make a move. And then Bitcoin follows, right? When gold slows down, Bitcoin makes its move. This period was unusual. Bitcoin made its big move first until April 1st, 2024. You might remember that was pretty much the period of the BlackRock ETF for Bitcoin. So Bitcoin took the lead here, and then when Bitcoin stopped, gold then made its move, right? Gold made this move here, and then Bitcoin followed and then made its move. Then, you see here, gold makes its move, goes sideways in April for a few months, then Bitcoin makes its move. And now gold goes for a massive move, almost a blow off top, short term, long term, I'm still very bullish on gold. And Bitcoin gets hammered here, right? From 126K down to 100K, according to Binance chart, according to the very criminal Binance chart that day. So then if Bitcoin, gold pulls back something like this, right? I don't know if it ever retags 4,000 again. We'd be lucky if it tags 4,000 again. I would buy more there. And then that money, let's say 1/10 of that money rotates into Bitcoin, and Bitcoin would explode upwards. That's the logic. And now basically the market is not only concerned with Bitcoin, with gold, it's also concerned with silver. Look at the move in silver. It's just that a lot of money are attracted into silver right now. So therefore, oh wow, the silver chart. You even see some correlation in the silver chart. Yeah, look, we could even say the same about the silver chart. Look at this. There's even some correlation here as well. Silver makes the move first in 2022. Silver rests, Bitcoin goes. Right? They rest together. Silver goes up first, then Bitcoin goes. Silver takes a rest, right? Then basically, now look, silver is pulling this move. And silver is about the same. Silver is actually same market cap as Bitcoin. They're both around 2.8 trillion, just under 3 trillion. So there you go. And now, what I want to say about silver is this. I'm sure a lot of folks have questions. Folks are basically saying, how do you buy into a silver market that's doing this? Logic normally would say, well, you wait for a pullback. And I've been buying silver between like $20 to $37. Like $20 when the bottom round here, right? As folks know, I've been talking about silver for a while now in my Discord. And then when it hit like 37, which is around here, around here, around this move here, I stopped buying. I was like, oh, this is going to go parabolic. I was wrong. Normally, when things go parabolic, like around here, around $47, $48, that's the all-time high. It would pull back like this, and you get some here at $38 again, and then go. But right now, what we're seeing is a breakthrough, and a fully confirmed breakthrough. Like maybe we wait for this weekend, maybe wait for the monthly close, whatever it is. It's looking like silver is confirming this breakout. What's the breakout I'm talking about? Look at this. This is 19 1980. That's 45-year silver chart. 1980, 45-year breakout. People may not be able to see what it is, so I'll put it onto a log chart so you can see a little bit better. On the log chart, some folks call this cup and handle. We have a giant cup. It's 2011. You wait 14 years for the handle, and finally you have a breakthrough here. So that's why I was nervous. I didn't add more. I stopped buying at $37. I didn't add more around 45, around once it got into 40s, because look, where was this top? $49. Where was this top? $47.50, right? So when I got to around 50-ish, and it's a big round number as well, I was like, oh, don't add to that. So basically, like, yeah, but imagine this though. What if this breakout confirms, we get a pullback, but it's a small pullback, we bounce off 48, 49 or 50, and then up we go. Like, what do you imagine a 45-year bull market, cup and handle in the making will do once it breaks out? What do you imagine that will do? Basically, well, I mean, here are some Fibonacci's levels I've ran. Let's see where that takes us. Okay, so here, see, I used this massive December 1990 bottom of $3.40, and then this top of $49 in 2011, and then this January 2016 bottom of $13 as my anchors, pivot anchors for this Fibonacci trend projector, and it's given us like $60 as a base target where we're headed next, and then $89, $90, let's call it that, and then I think more likely $135. Why do I say $135? I think it'll easily get over 88 in the next 2 years. Not straight away. We could have a recession. In a recession, boom, it goes down like 20%, 30%, 40% easily, right? Because the industrial metal, silver is industrial metal. Why are we going to hit that target? Well, it's pretty simple. Silver usually follows gold. Gold broke out from its new all-time high, from its old all-time high in 2011, and it broke out like it's now more than 2x. Because for gold, see, gold all-time high, it was the 1950 area. See, here's the gold chart and looks a little bit different. See, here was the previous all-time high around $2,000. Just 1950, let's call it. Just below 2,000. And now we're at 4,300. So it's basically gone double the previous all-time high and then some. So what does that mean for silver? Silver previous all-time high was like $49. So that will take us to $98, right? $98, and then go something like 10-20% above. That would easily take us over 100, 120, and this projection says 135. So at least 115, 120 area. And if this Fibonacci is correct, 135. That's a reasonable projection, considering if gold doesn't go any higher. But look at this. The silver peak, we're still just getting above the silver peak of 1980 right now. Silver peak in 1980 was $47. And we're just at $53 right now. So, I mean, we are $4, like $6 above the 1980 top. 45 years. That's before, I'm guaranteeing that's probably before 99% of you guys' birth date, right? It's definitely before my birth date. So basically, in all that time, look how much inflation has gone up. And yes, silver has gone, boom, hit that high 40s again, and got rejected for 11 years. Then boom, hit that level again, and finally popped up above. I say, this could be a premature call, nothing's 100%, but I say we've confirmed above, right? We could wait for this weekend to confirm again, for 2 weekends to confirm. We could even wait for end of this month, October 2025, to confirm, and then boom, up it goes. But I think we've confirmed. And of course, anytime a recession happens, silver goes down at least 25 to 40%. So just watch out for that. Unlike Bitcoin, look at Bitcoin. Unlike gold, basically, which has sort of, that was the 1980 top, right? That was only $800. And then 2011 top was $2,000, and now $4,000. So $4,000 is 4.5x. 4.5x more than the 1980 top of $8.45, right? Whereas silver is still like only just a little bit higher than the 1980 top, and a little bit higher than the 2011 top. Okay, one more thing I'm going to talk about is basically platinum, and I think platinum, kind of a similar story. If I put it onto a regular chart, it looks like this. Basically, this top was 2008 and 2200, and right now we're still stuck at 1700. And remember, sometimes platinum is actually worth more than gold. So I've been talking about platinum around this 900 area, made a lot of posts, spoke about it in my Discord a lot. So here's another trade that I think, if gold is like twice above its all-time highs now, then for platinum to go right to 4,600, let's call it 4,800 or even 5,000, that's only a reverse. What do they call it? Reversion back to the mean, or that's just to be expected. It doesn't even have to outperform gold. But often in history, platinum is seen sometimes as more precious than gold, and it could become like worth, 1 ounce of platinum could be worth 1.5 ounce of gold, or even 2 to 1, a ratio of 2 to 1. That would price platinum as 10,000. But of course, if that does happen, then we're looking at what, 3, 4, 5, 6 years from now. So not in the immediate short term, but those are the numbers to keep in mind. Okay, thank you for tuning in, folks. I'll catch you next episode.